and we'll just do that first. So in meeting rooms in the Capitol building, you have a little switch in front of you next to the mic. And when you want to speak, you have to consciously flip it up to the on position and speak into the mic so that your voice can be recorded. And then, if you remember, turn it off when you're through speaking, so that we don't pick up the background noise. So
recording in progress.
There we go. On cue. So I'm State Representative Steve Elkins. I represent the western half of Bloomington. I'll be convening the meeting today. And I would first like to introduce Katie Hatt, seated to my right here, who is with Minnesota Management and Budget, to introduce the supporting members from MMB that will help us run this task force.
Thank you, Representative Elkins. Welcome, members. We're really glad to see you. Thank you for serving. My name is Katie Hatt, and I am at Management Analysis and Development, or MAD, and we are a consulting practice within state government, as Representative Elkins mentioned, based at MMB. So I'm delighted to be here supporting this task force. I have two colleagues who are joining me on our MAD team, Samantha Grant to my right, and Cameron Smither, who is over to my left. And Cameron will be working with the task force members who are participating via Zoom today. Thank you.
Yeah. And then seated to my left are the members of the Legislative Coordinating Commission who will be supporting the task force. So the LCC, as we refer to it, is a joint House-Senate body that facilitates these interim meetings that involve both House and Senate participation at the same time. Austin?
Hi, members. My name is Austin Turman. As Representative Elkins said, I'm from the LCC. I am a research analyst. I'll help with any research the body would like done, and some administrative tasks. I'm joined today by, with Andrew George and DeMarco Walton. Thank you.
And from the organizational meetings I've been having with these staff members, I think we're going to be very well assisted in this endeavor. I've really enjoyed working with them. The agenda is on the screen right now. If you want to peruse it quickly, no need to rush through each item individually right now. But the agenda is also, of course, in the materials that you have in the folder today. So we want to move to the next slide, I think, at this point, to review the basic operating agreements or ground rules. And the first thing that we're then going to do is do quick member introductions. And so we have a lot of business to conduct today, so we want to keep those introductions brief. We'll have time at the end where we can go through in more detail what each member's motivations or interests were for being on this committee, and which is a pretty august body. I'm really pleased with the composition as well. Jean, you want to start down at that end?
Sure. I'm Jean Sundloff. I work at Krause Anderson Insurance. I am president of the Big I of Minnesota. I teach insurance, and I'm also on our HOA board.
Oh, cool.
Hi there, Anna Midgley. I work at Western National Insurance and have about 22 years in the property and casualty insurance industry, specifically relating to personal lines and commercial lines insurance.
I'm Adam Axfig, President and CEO of the Minnesota Association of Farm Mutual Insurance Companies. I've been working around this building for about 20 years now, nearly six of which have been with my association I'm with currently. So, thank you.
Aaron Cocking, I'm the President and CEO of the Insurance Federation of Minnesota. The Insurance Federation is the voice of insurance in Minnesota and has been for more than 100 years. I'm here to offer the perspective from the P&C industry.
Hi, I'm Peter Brickwitty. I'm Senior Director of Insurance Sustainability and Climate at the Minnesota Department of Commerce, the state's insurance regulator.
Steve Elkins again. Let's see, we're over to Jessica, I guess.
Hi, my name is Jessica Shinsky. I am a policy attorney at the Housing Justice Center, where our mission is to preserve and expand affordable housing.
Hi, everyone. Carrie Johnson with the Minnesota Consortium of Community Developers, and we represent nonprofit affordable housing developers, single-family developers, and economic development organizations. Last year, we started to hear sound the alarm about the growing insurance crisis. So we brought forward a bill to establish this task force last session, and it passed. So here we are, and I really want to thank Representative Elkins and Senator Seeberger for driving this forward and helping to push it across the finish line this past legislative session. And thank you to all of you for committing your time and your expertise to hopefully identifying some issues that can help stabilize the insurance industry and thus stabilize the affordable housing industry. So thank you so much.
Hi, good afternoon. Foss Scholes. I'm simply an insurance agent. Out of Bloomington, I have a PC segment, and I spend all my time in the commercial segment. I've been a 20-year member of MHA. I do everything from apartment buildings. Right now, I'm doing half a block at Hennepin Avenue and 2 office buildings. So I focus solely on commercial insurance in my agency's half, and I know the market fairly well.
Okay, great. And we have 2 members participating remotely today. At least one of them is present on Zoom. Jacqueline, would you like to introduce yourself?
Sure. Good afternoon, everyone. I'm Jacqueline DeMedici Bruno, and I'm the Director of Insurance for Ceres, a nonprofit that addresses the financial impacts of climate risk on the insurance industry. But I'm a former longtime insurance regulator for over a decade, and I've also worked on the carrier side of things. So happy to be here and part of this conversation.
Great. And then I think the final member, Josh Ream, is not online yet. Okay, so if Josh shows up, we'll invite him to introduce himself when he arrives. So the next order of business is the election of task force leadership, and I think you're going to give us an overview, Austin.
Per the enabling statute, at the first meeting of this task force, the body must elect a chair or co-chairs from the members appointed by the House and Senate by a majority vote of those members present, and may elect vice chairs as may elect a vice chair as necessary.
Okay. Would it be appropriate for me to mention the situation we have with Senator?
If you'd like.
If nice. So as we were working with staff to organize the committee and get things organized, Senator Seeberger, who will be the Senate appointee to this committee, agreed that we would want to co-chair the committee and just take turns with the gavel. Unfortunately, the Senate, as usual, is working on Senate time, and her formal letter of appointment has not come through yet, which is why she's sitting out in the peanut gallery. So I guess what we're limited to being able to do would be accept a nomination. I would like to be the chair, and then once her letter comes through, what we'd like to do really is have us be co-chairs. But for now, all we can do, because her letter hasn't come through, is elect a chair. So hoping for a nomination from the floor.
Mr. Chair, I would nominate you, Representative Elkins, as the co-chair of this task force.
Moved and seconded. Any discussion? Any other nominations? If there are no other nominations, then I guess we can vote is in order. And all in favor of me as the current chair. I'll do a roll call. We have to do this by roll call. Okay, cool.
Adam Axfig.
Aye.
Peter Brickwitty.
Aye.
Jacqueline DeMedici Bruno.
Aye.
Foss Scholes.
Aye.
Aaron Cocking.
Aye.
Representative Elkins.
Aye.
Carrie Johnson.
Aye.
Tim Johnson. Jessica Sheminski.
Aye.
Anna Midgley.
Aye.
Josh Reams. Jean Sundolf.
Aye.
Representative Elkins, there are 10 in favor.
Okay, so I guess I am elected the chair for now. And at this point, I'd like to invite any other legislators who are here present to join us at the table if they would like. Come on down. Okay, welcome.
Thank you.
Austin, you're going to walk us through the enabling legislation, I think, at this point?
This task force was established in 2025 to evaluate and provide recommendations to insurance affordability of single-family housing, common interest communities, and multifamily rental housing, and for preventing disruptions or loss to the development, preservation, and long-term sustainability of Minnesota's housing infrastructure. Some of the duties include identifying recommendations to strengthen and stabilize the homeowners and commercial property insurance industry. This task force must review risk mitigation and property resilience to natural resources and the effect on insurance costs, the effect of liability laws on insurance costs and whether tort reform could reduce costs, minimum notice for coverage changes, including enforcement and oversight, public reporting of aggregate data relating to insurance plans and cost coverage. 5, the insurance market for homeowners and commercial property insurance, the current state-supported insurance program, and the potential to expand the program to include a catastrophic reinsurance fund and self-insured pool. Factors that increase claim costs, including but not limited to post-loss contractors, fraudulent claims, climate change, inflation, and discontinued building materials, regulatory factors that increase insurance costs or decrease access to insurance products, and any other areas that would strengthen and stabilize the homeowners and commercial property insurance industry. In doing so, the task force must consult with the Commissioner of Housing Finance Agency, the Commissioner of Employment and Economic Development, and other relevant state and local agencies, as well as key stakeholders in the insurance and housing industries. The work of this task force will accumulate into a report that I will help draft that includes a summary of the task force activities, findings and recommendations adopted by the task force, recommendations relating to tort reform that could reduce insurance costs, any draft legislation required to implement those recommendations, and other information the task force believes is necessary. That report is due February 15th and will be submitted to the Commissioners of Commerce, the Housing Finance Agency, Employment and Economic Development, and the relative legislative committees. I can pause there for if there's any questions.
Members, any questions at this point for Austin? Okay, we can continue.
And then moving to the open meeting law, which pertains to this task force under Chapter 13D, which just generally means that public bodies must be open to the public. The Supreme Court has identified 3 purposes to this law, which are to prohibit actions taken in secret meetings, to ensure public's right to be informed, and to give the public the opportunity to present its views to the public body. However, open meeting law does not require that this task force reserves time for public comment. So a meeting is when there's a quorum or above, and the quorum discusses, decides, or receives information as a group on issues related to official business, whether action is taken on that or not. Something that would not deem would be a meeting of the group would be something less than quorum. So we have 12 task force members, so that would be 7 and up would open meeting law would apply. Some activities to maybe avoid is email chains that could be constituted as a meeting if there were more than the 7. But one-way communication to staff or chair members would not, does not apply to open meeting law. If I can take questions now, I also am available for questions via email. My email is at the bottom of your agenda.
We have a very approachable staff, so don't be shy. Okay. I think that covers that one. We can go on to other initial business, and Katie and Austin will be walking through the content here, beginning with Katie.
Thank you, Chair Elkins. Members, if you can see on the screens, here is our meeting schedule. So we will have 4 meetings after today before the end of this year. We are looking to wrap up meetings in early December and then take a break and resume with 3 meetings then in 2026. So we'll be on a cadence of about every 3 weeks until December. And then in January, we'll squeeze in 3 meetings over roughly 6 weeks so that we can have everything wrapped up for the final report that Austin mentioned. If you are going to participate in person, that is great and encouraged. If you join remotely, if you can let Austin know as soon as that will be the case, that will help me and Sam and Cameron with our LCC colleagues to make sure that we are designing the best meeting possible and ensuring that you're having a positive and productive experience, whether you're here or on Zoom. And Austin, I'll turn it over to you.
I have 2 things to cover. First, we have drafted a charter that would explain and expectations of group members. That will be sent out from me before the next meeting. And if you, and would, the body would take a vote on that charter at the second meeting. Additionally, I'd like to highlight on the task force page, there's a tab for resources. I believe it's called under more information. If members would like to send anything that they would like to share with the group, they can send it to me and I'll work with Chair Elkins to get that information on that tab.
Yeah, and I was thinking about things like white papers or studies that members are familiar with that would be of general interest to everyone that would help us do our business.
One other note, watch for Outlook appointments for each of those task force meetings. Those will be coming to you by the end of the week. You're welcome if you want to hold them in the meantime, based on those dates that we shared. And then one other note, if you are unable to attend a meeting and you want to invite a colleague to participate or someone to sit in your place for that meeting, they can do so. Any official actions such as roll call votes, you as the appointed members are the only folks who can take those votes. But if you know you can't come one time and you'd like to have somebody here to ask questions, that's totally fine. Reach out to Austin or I with any questions.
Cool. Next item on the agenda is a presentation from the Commerce Department, an insurance market overview. And we have Julia Dreyer, the Assistant Commissioner of Commerce for Insurance, will be making that presentation. So welcome to the task force.
Thank you. Some tech help here.
That's what I'm here for.
All right. Okay. Good morning or afternoon. Hi, everyone. I'm Julia Dreyer. I'm the Deputy Commissioner of Insurance at the Department of Commerce. Appreciate you having me here today. We're going to do a quick overview on Minnesota's P&C insurance market. So just at a high level, Commerce's mission is to protect and help consumers across the wide breadth of Minnesota's economy that we're responsible for regulating. This obviously includes, but is not limited to, insurance. So our department looks at a variety of insurance types, auto, health, homeowners, life, we run the gamut. This work includes licensing insurance companies to do business in the state and licensing insurance professionals to sell insurance, reviewing carriers' policy forms and rates, looking at companies' financials and making sure they're able to pay claims and meet other long-term obligations, monitoring insurance markets more generally, And then based on any issues we're seeing, make policy recommendations to address concerns with how the market is working both for companies and for Minnesotans. The bedrock of insurance regulation is whether or not the market is competitive. So this is really what we look to Minnesota Statute 70A to outline some statutory tests in terms of competitiveness within a market. The general presumption is that a competitive market exists if there are 5 or more insurers writing 75% of the direct written premiums, which is a great start. But the competitive test also doesn't take into account the affordability or accessibility of a market for consumers. It also does not contemplate whether Minnesotans think they can afford to buy their insurance and once they have it, afford to use it effectively. So within that context, we know that the homeowners market has been increasingly challenged over the last decade in a couple different fronts. One, insurers have lost money for the last 10 years, for much of the last 10 years. Price-sensitive consumers are shopping and looking for a deal for their insurance, but while many of them are finding premium relief, they're also taking on more risk by either changing deductibles or changing the amount of their coverage or the type of insurance that they're getting. We're also starting to see some consumers getting their homeowners coverage in the surplus market, which is unregulated and not looked at the same way we look at other products. And then for the task force members, just for additional information, there is a link here. Do people have access to this electronically? Okay. There are details about the market that are included in the NEIC state profile. The most recent version that has been released is from 2022, so it's a little outdated, but we can certainly, if it's updated in the meantime, during this conversation, share that. How we oversee the insurance market or insurance markets can vary depending on the product and the type of insurance we're looking at, and these processes can also vary a little bit by state. Here in Minnesota, we regulate both our homeowners and our commercial markets differently as well, and differently from our health insurance market. So I think a lot of times when people think about their insurance regulation, they think about the fact that we are looking at rates, we are approving rates. But particularly in the homeowners market, most companies file their rates under what we call file and use. So this refers to an insurance regulatory process where insurers submit their proposed rates, rules, or forms to us, and they can implement them before we finish our review. So in this case, the state does retain the authority to disprove them later if they're deemed unjustified or non-compliant with statute. So this contrasts with prior approval, which we use in the health insurance space, is, where insurers have to receive explicit state approval before implementing changes. Additionally, just of note, in Minnesota, P&C companies or property and casualty companies can also use an expedited filing process, which further limits what we look at. Homeowners is the second largest P&C line in Minnesota, so a little over around 21% of the market share and over $4 billion in written premium in 2024. The loss ratios and company profitability have been extremely unfavorable for companies over the last decade. 2024 was the best year since 2018, and you can see that carriers are paying out more in claims than they are bringing out in premiums when you look at this graph. That green line is that break-even point, or an estimated break-even point on a given year, and you can see that we haven't been close to that since 2018.
Ms. Dreyer, a quick question here. What is the significance of the 60% line?
That is just roughly that break-even.
Break-even?
That green line. This graph shows us the impact of extreme weather events in Minnesota. So you can see in 2022, there's some significant losses there, and that was when we had $3 billion weather events the same week in May in central Minnesota. And then you can also see a fairly large set of losses in 2023, and we refer to that as our happy hour hailstorm on August 11th. So it was a half-hour storm in the Twin Cities, and it was more than $1 billion event. And I would say that this doesn't even fully capture the full impact of extreme weather because it doesn't reflect flood events because flood insurance is typically not covered by home insurance policies. In terms of premiums, they're up approximately $600 since 2014. We don't quite have the 2023 and 2024 data from the NAIC yet, so this is based on some of the data that they collect, but we do know that average premiums are continuing to rise. We also have some evidence that policyholders are taking on more risk, so paying higher deductibles, actual cash value policies. So they may be keeping their premiums lower or steady, but purchasing a product that may not be quite as valuable. This is really just a heat distribution map of where the policies are in Minnesota. Probably not surprising, but you can certainly see the urban areas in the yellow and orange, but you can also see some of the impact in the sparsely populated areas as well. So Commerce licenses insurers to sell in the state's admitted market to either sell commercial or homeowners. But with the exception from filing requirements, Commerce has sometimes limited ability to review how many different policies are available for associations to buy, so homeowners associations, or even to know how many carriers are even selling in that market. So this is an area where we don't quite have the same insight or view into what's happening. Commercial plan filing, commercial plan filing exemption rules are based in part on Part 2700, and some of the decisions for policymakers are in there as well. So associations also fall into a gap in this within the system in terms of the state insurer of last resort. The FAIR plan that is set up in place in the homeowners policy is not currently an option for a lot of people who are using homeowners associations. And then the other thing I just want to note is there are HO6 policies to help protect a unit owner's possession. So those are also overlapping and connected to some of the unexpected losses associated with association costs. In Commerce, we also continue to hear complaints around property management company practices, but just note that we don't regulate them or their business practices. Certainly, we've heard about a lot of heard from insurance companies and contractor-related testimony in various working groups on this issue, but just noting that we do receive a fair number of complaints about this. And I can pause there. I'm happy.
Questions from members? That must have been very straightforward, Ms. Dreyer.
I'm sure insurance
Yeah.
always is, right?
Clear as a bed. So, okay, thank you very much.
Thanks.
Okay, oops, where do we go here? So we're way ahead of schedule, which means that we've got a lot of time for discussion here if we want to use it. So as the next item on the agenda is to gather input on issues and challenges, brainstorming and brief report out. So we've allotted 30 minutes. We can take more than that if we need to. So I think Katie and Sam, you're going to explain the exercise here.
Yes, and let me note briefly that if you have questions after today, Friday, or making a peanut butter sandwich, and you're like, oh, wait, I have a question for Commerce, send those to Austin. He'll compile them, and we can create a compendium for the next meeting. So on to our input activity today, and I think DeMarco is going to get the slides back up. Oh, no, that's okay. Okay, take a minute. Okay. So while Sam is doing that on both of our behalves, we will thank you for participating in individual interviews with us ahead of this first meeting. It's been a really terrific opportunity to get to know you a bit, understand what you're bringing to this task force. So as we have, can we back up one slide? Perfect. Okay. So in those interviews, these are some of the high-level themes and topics that we have heard from you all. So I'm just going to take a moment for y'all to look at that. Okay, so if you'd like to refer to this as we work over the next half hour or so, you're welcome to. But with that, I'm going to turn it over to Sam for the instructions.
All right, I'm gonna back up one, and there's a little bit of a lag. Of course, there's not when I say that. So we are going to give you a little bit of time to think individually, and then we're going to have the opportunity to share out. So Katie just highlighted that you all already have thought about problems and challenges related to this issue. And so we have two more prompt questions with some similarity. First, to think about what are the problems that this task force seeks to solve, and then what are specific issues or challenges to highlight as the task force begins its work, keeping in mind that we already discussed and highlighted some of those challenges. So I was going to pass these out. You want to do that? And then if you want to just pass that down and around, we'll be back to elementary school here.
Grab a snack or two.
Yep.
If you run out, we'll get you more.
So please use the Post-it notes, one idea per Post-it. So, okay. Take a couple of Post-it notes out of the pile and then write your answers to these prompts. We're gonna give you about 5 minutes. If you're done way before 5 minutes, we can come back. And then we're gonna ask you to share out one thought from your Post-it notes. In the, sorry, I'm a former educator and I realize I'm giving a lot of directions here. So in the corner, if you could put your initials just so we can track, that would be excellent. One thought per Post-it. We're gonna collect these after we do a round robin of sharing the responses. Are there any questions from members before we give you a little bit of quiet process time?
So you can explain again what you want us to write on these.
Yep, so your answers to those prompt questions, which are also in your packet too, if it's hard to see there. Problems that we should solve and specific issues or challenges that we have to be aware of. All right.
And if you have any questions, Sam or I can come around for individual consultations, or feel free to share with the group. How's everybody doing? Do you want a few more minutes, or is everybody pretty well down with your ideas for now? Okay. I'm going to pass it back to Representative Elkins for just a second before we continue.
Okay, so what do we want to do? We're going to collect these. Yeah, oops, here we go. Oh, apparently our final member has arrived online, so welcome, Josh.
Thank you very much. My apologies for having to be a half hour late. I was teaching, but glad to be here.
Oh, yeah, you want to give like a 30-second introduction?
Sure, yeah. So I'm here as a representative from the Community Association Institute, which is the homeowner, the HOA side, kind of our governing body, if you will. So I've been in the industry for 20 years. I work at a management company that manages HOAs. And I was the chapter president of the Community Association Institute in Minnesota. So I have a lot of background in bringing the HOA perspective. And obviously our industry, why this was created, right, is really challenged with insurance in so many ways. So super excited to be a part of this group and hearing, any impact that we might be able to have.
Okay, thank you.
Thank you.
Terrific. So now what we are going to ask is we invite each member to start with what were your one or two Post-its that you would really like to share out with the group today. Now, we will have some extra time, so if we want to go even a next layer down, we can. But for now, let's take the next 20 minutes or so, and we'll do this popcorn style, which means as you'd like to offer up your ideas, just raise your hand, and we will recognize you. And Josh and Jacqueline online, Cameron will let us know when you want to jump in, and we'll recognize you then. So who would like to kick off with their kind of top or most pressing note?
There we go.
Jean, great.
Somebody has to do it, right?
Yeah.
Thank you.
A problem that I would bring up is that construction materials are not resilient in our climate against hail and wind and wind-driven rain, and they are also frequently discontinued so that we can't get the same product to match a particular unit.
Cool.
Terrific. Any reactions to that? People in agreement, not in agreement? Feel free to give like a thumbs up, thumbs down, wave your hands, whatever you'd like. Okay.
I think there's been especially interest in more resilient materials, and interest in explaining to what degree, if you use more resilient materials, is your use of those materials reflected in the insurance rates that you pay? Carrie?
In response to that, I'd like to just offer up the Alabama has passed a fortified program that I think we should look at, and that has resulted in more affordable coverage and availability of coverage.
Yeah, and if you can make sure that these guys get a copy of that they can post so we can all read it.
Absolutely.
Mr. Chair, I would point out Minnesota's already passed that.
Oh.
We passed that in 2023 and are in the midst of working with the Department of Commerce on implementing that. The Alabama study done by Dr. Lars Powell is significant. I would point out that study in Alabama was more reflective of the resiliency of the hurricane exposure, and that's significantly different than the wind hail exposure that we see in Minnesota.
Mr. Chair, just to put this is Peter Brickwitty from the department, to put a finer point on that, the Strengthen Alabama Homes program has issued grants to over 9,000 residents of that state, but they have now in Alabama over 70,000 fortified roofs in the state. So I think success in Alabama has not just been defined by how many residents of the state is able to directly assist, but rather to create the economic conditions where people across the state are able to put a stronger roof on their home to protect themselves against the next storm, which has the effect of reducing insurance costs for everyone in the entire market. As Mr. Cochran pointed out, we did pass Strengthen Minnesota Homes program. We received $1 million in planning funding from the legislature to start to stand up and organize a program, but the legislature did not actually fund grants. So actually putting that program into function would require additional work from the legislature.
And do we know if our construction industry is poised to start building in that manner so that homeowners can take advantage of this?
Mr. Chair, I think that's a great question, and I'd defer to folks from the construction industry. I think we've had some great success this year in expanding the understanding and knowledge, and that's going to continue. Deputy Commissioner Dreyer's on a panel at the Realtors State Convention next week. Some folks from a partner organization called Smart Home America are going to be in town next week for a different conference, talking with people. We've gone from only a handful of contractors and certified evaluators in the state who are the people who do the labor to over, I think, several dozen contractors now have gone through the training and are available to assist Minnesotans with that today in this last year. So I will preface all of that by saying we have about 5 total fortified roofs in the state of Minnesota now. So we really are starting that program from the ground floor.
Yep.
While I agree that hurricane exposure is different, wind is wind is wind. And if we can figure out a way to expand adoption there for a program that has been proven to be successful in making homes more resilient, that could be something that could have a significant impact on reducing our risk exposure and hopefully improve affordability of insurance.
And do we know if this has been brought before the Department of Labor and Industries Construction Codes Council to talk about possible building code modifications or just help with assistance in getting the word about this out to the industry?
Mr. Chair, we have talked with our colleagues at the Department of Labor and Industry about the program generally.
Yeah.
I don't know if it's been brought before the codes adoption process.
Yeah.
I think in most states to date that have done a similar kind of project, Alabama is not the only state that has established a program. This is something that's above the code standard in those states.
Okay, thank you. Good. And I think Jacqueline has a point she'd like to share.
Yes, what I had responded for number 1 is very aligned with what we've heard so far. Just addressing affordability and resilience measures and mitigating those various factors that are continuing to drive significant premium increases. But also paired with that consumer education element so that consumers are more aware of the issues and the solutions that are out there for these things.
Yeah. Carrie.
Thanks. Yeah, Carrie Johnson, MCCD. To, kind of the affordability and availability, I would say a lot of MCCD's members are aware of some of the measures that they need to take in order to make a successful application for insurance. However, the lack of interest in even providing insurance for a lot of affordable properties is just not there. Some of our members are writing like 50+ applications, maybe to only get 1 quote, or they're having to go to the surplus market. We're needing to require upgrades or deferred maintenance in order to get insurance, yet the state is not funding preservation of these properties either, so it's kind of a chicken and an egg problem where we need to preserve these properties in order to make them a little more resilient in order to get insurance. And so we've got a lot of properties that are taking extra measures for security and, doing maintenance on their roofs and whatnot, but they're still coming up against a brick wall and they're not able to get insurance. And the amount of time that is spent just applying for insurance is outrageous. I'd also say, we're hearing from our members that they are sending out on the single family side. We are seeing pre-foreclosure notices increase, and I feel like we are on the brink of another foreclosure crisis in the affordable space anyway. And then I could go on, and I will stop here now, but I just wanted to say by the challenges, I would hope that we can identify some real changes, and then how do we ensure that with those changes actually results in more availability and affordability. So
I'll throw one out there real quick. It's just in the conversations with stakeholders that I've had leading up to this, one of the factors that's been raised is the role of the reinsurance carriers. And I'm hearing that the frontline insurers, the ones we see advertised on TV every night, have been having a harder and harder time laying off some of the risk to reinsurers, and that's magnifying the kind of a multiplier effect on the risk that the frontline insurers perceive, and that may be exacerbating the issue. Yeah.
Mr. Chair.
Yeah.
Aaron Cocky, Insurance Federation. I think to the point that Ms. Johnson made, the notion of availability and affordability is very subjective. I mean, Congress went through this exercise a few years ago and wasn't able to identify what affordable means, and I think that's a challenge. If we're gonna use terms like affordable in what way? I mean, what are we talking about? And I think that's one of the challenges that I had written down. You know, number one, what are we defining as the problem that needs to be solved? I mean, what we're here for. I mean, we all have these different ideas of what's the problem that we're looking at. And I think the other part of this is that identifying things that the legislature actually has the capacity to deal with. There's a lot of grand things. I mean, there's nobody that's talked more about the impact that climate change has had on insurance than I have. But no matter what recommendations we put forward as this group, and the legislature can pass all the laws they want, we're not going to solve climate change in Minnesota. As much as, from our industry perspective, we would love that. I mean, if we could find a way to make
I have a slip like that. Which of the issues before us are actually amenable to legislative solutions, and which ones aren't?
Yeah, but I think there are things that are also identified in the task force's charge that the legislature absolutely has control of, that will absolutely address some of these cost drivers. And if we're serious about bringing the cost down, and I won't use the term affordable because I think that's undefined, but if we're serious about bringing the cost down, there are things that we can look at that this task force can recommend that the legislature actually has the capacity to deal with, that can actually bring some of those costs in line. Mm-hmm. And I'll just finish by one other thing. The recommendations that come out of this task force and the recommendations and whatever the legislature ends up passing recognize there's a dynamic here that the insurance market is going to be responsive to what happens. We can look to states, to the actions that other states have taken and seeing kind of how insurers have responded. The actions that Florida had taken a couple years ago that have drawn insurers into the market, and actions that states like California have taken, which have driven insurers out of the market. And the way to get to the point where you have more availability is more insurers coming into the market. And so I think this task force identifying things that want to draw insurers to the market is a key thing at addressing some of these challenges.
I would say.
That's on one of your Post-its.
I got them kind of all jotted down in a variety of different ways.
I think we're here because of the increases and the secondary impacts that they're having on ability of homeowners associations in particular to get insurance at all, and the impact that the level of insurance rates is having on affordable housing developers keeping their properties, their rents affordable, or just to be able to maintain themselves as going concerns. And in some markets like Florida, I'm now hearing that, for single-family homeowners or erstwhile homeowners, we're seeing sales of homes fall through because the buyer cannot obtain insurance that satisfies the mortgage holder. So those are the kinds of, I think, secondary effects that are why we're here today. Jean.
Mr. Chair, I would add just a couple of points. One is the mention of the excess and surplus lines marketplace, and I think we need to recognize that it serves a valuable role in the industry and often is able to fill some gaps on some difficult risks and can be very competitive. Also, I'm in the affordable housing space and have seen a fairly dramatic improvement this year over last year. So we are seeing some improvement in availability for many risks. There are always going to be outlier risks. I have some who have not repaired damage, and they have open damage. Those are going to be problematic no matter where we are.
Yeah. Mhm. I see, you look like you have something for us.
I deal in the commercial space, and one area that is hidden, but it's percolating, is liability lawsuits. There is, for example, right now, that's probably double per unit what it used to be 2 years ago per unit to insure a apartment complex. So if their liability cost was $43 per unit, now it's $80 to $100 per unit itself. It's a hidden cost there, which is coming through because and you can look it up, the term nuclear lawsuits that you see around the country, that these $10 million type lawsuits are being litigated and settlements being made. I did a class at the MHA event in April, and I educated people on TPLFs, third-party litigation funding.
Oh.
There's over $15 billion, and if you invest your money in this fund, your only return on your investment is if the attorneys are successful with their lawsuit. And so that percolates through the insurance business because, as I insure apartment buildings, their costs are rising. The insurance market will adjust for the wind, hail, and so forth with deductibles and such, but the liability lawsuit exposure is what scares a lot of carriers.
Yeah, when you get, it's hard to underwrite when the jury awards are all over the lot. Yeah, I think that's litigation costs are a subtopic that we'll probably spend a fair amount of time on here. Mr. Cockey.
And to my earlier point, something the legislature actually could control.
I just wanted to mention two more things kind of in response. Just to make clear, I want to make sure the insurance industry stays in Minnesota. We need the insurance industry to stay here. And it's required for affordable housing to operate and to thrive and succeed. And so I just want to make clear that I'm entering this from a place of wanting to actually find solutions. The other thing is, I know membership was limited to, because there could only be 13 members. But there are some organizations missing that I would love to make sure that we do get to hear from, the Minnesota Homeownership Center, realtors, and I think we could find a lot of value also hearing from organizations like the mortgage bankers when we're talking about requirements by the financiers of mortgages and investors. I think that's important to have in these conversations as well, so.
Is there anyone who has not yet spoken who would like to raise their hand? Yes, Mr. Brickwitty.
Mr. Chairman, I think almost all of what I had written down has been touched in some form or fashion. I think what I'm hearing from colleagues around the table is that the question of affordability is going to be hard to define. But I think maybe one way to think about it would be, can Minnesotans and their trying to get insurance for their home or for their business, can they afford to buy the insurance? And then can they also afford to use it when they need to? And I think that's going to be unique to the circumstances of each individual insured, but that concept of affordability, of both being able to afford to buy it, but then also be able to afford to use it, is something that we've heard from consumers for quite some time. I'm very pleased to hear colleagues talking around the table about how we can think about incentivizing risk reduction, things that both homeowners, renters, and businesses can do to reduce their risk exposure, to make, and that's something that can directly contribute to a positive answer to that first question. And then I think I would also add, and this is one of the charges, so I'm sure we'll look at it is how do we think about the safety nets for these markets, or the lack thereof, particularly for businesses who source their insurance from the commercial market. I think the functionality of the insurance in the safety net programs is going to be an important topic to think about, because that I think has an interaction with the surplus and excess markets, which I agree do serve a really important function for specialized risk. But I think what we've seen, or we think we're starting to see in Minnesota, and we've seen in other states too, is sort of a start of a migration from the regulated market to an unregulated market just for homeowners insurance, for your standard homeowners insurance coverage, which I think is a trend that policymakers should be attuned to be thinking about why that's happening and whether or not that's something that's good for consumers. So I'd add that safety net scale to our discussion topic as well.
Okay. And then, you have a follow-up?
Yeah, can I respond just really briefly, Mr. Chair, to a comment Mr. Brickwitty made about his definition of affordability? And I think this is where the challenge arises because the risk exposure to the insurer is not adjusted based on somebody's ability to pay the premium or to pay for their deductible. And I think that's important. If I buy a house that, you know, has got a 50 square roof, my insurance is going to reflect that because of the exposure. If I can't afford that exposure, that's not on the insurer because their insurance is unaffordable. It's on them because they're pricing what that risk is. And I think that's a really important component to consider. And the danger, I think, in walking into the notion of affordability, because the notion of affordability is almost irrelevant to what the insurer is pricing at.
Yeah, I raised that issue because it's just becoming a more visible issue because it really, up until now, hasn't really been a key factor affecting whether somebody can afford a home or not. Yeah, okay. I think Josh has a comment on Zoom.
Yeah, thank you, Mr. Chair. Just as I think about the homeowner association side, my primary kind of interest here is the affordability, right? Because as premiums have just significantly increased, that means that homeowner dues that they pay their association have significantly increased. And when we look at the stats of HOAs in the state of Minnesota, I mean, we have just shy of 8,000 homeowner associations in our state. And that's 1.4 million people that are living within those. And when I look at the last 5 years, I can't think of a time that one of the line items of the budget of an association being insurance that did not have less than a 20% increase in what we have to pay to secure a policy. So that's just compounded. And, you know, an interesting exercise that I did is I looked some of the budgets I used to do for my associations 10 years ago. And in general, insurance made up 10% of the budget of an association. And now, in general, insurance is almost 60%, more than half of what, in general, and you know, obviously generalizing, but associations are paying their dues. Half of it is going towards funding the insurance policy that that the association needs to secure. So I realize, so that's kind of where I'm coming from is how that's affecting the homeowner association and those individual homeowners. And to the point, so the affordability thing there, you're right, hard to define, but when you look at it that way in my world, you see the cause and effect. And the bigger question that I've struggled with since day one of this group is, yes, how does the legislature impact that? I mean, you can't control the insurance industry, and you can't bring carriers in, and you can't dictate what their premiums are. I get that. So what are the ways? And that is a question I grapple with. One of them, and I look forward to more meetings and conversations on this. You know, the state statute that governs homeowner associations, the 515B, you know, is pretty specific on what homeowner associations are, that fall under that anyway, are required to insure their association. It's a guaranteed replacement value. So I get the rationale of why. I certainly understand that. To maintain those values, you want to make sure that it's insured when there's losses. But with that requirement means the options for policies and then the carriers that offer those policies today is an issue. So maybe that's an area to talk about.
Yeah, I just, when I was first getting involved in this issue, it was because I was hearing stories from homeowners association residents whose associations were having to go to the surplus lines market to get property damage insurance from Lloyd's of London at 4 times the cost of the previous year. And so it's stories like that that are spurring the existence of this task force. Anna, you've been quiet down there.
I feel like I do have something to say about the HOA market, and, premiums are high because of claims. Obviously, money has to come from somewhere. I thought it was interesting when we were hearing from the Department of Commerce that, to make a point that they don't regulate homeowner management companies or anything along those lines, because my question is, who does? I mean, in claims, I work in claims every day, and I see these claims come through specifically from the homeowner on the HO6 side. And though they're getting billed, all those costs go down to the homeowner, right? The price of the insurance, then the deductible on the claim, it all comes down to that unit owner. And they're getting billed for things that typically wouldn't be covered if it was, a freestanding home. Things like public adjuster fees, management company fees that are being added onto the claim. So that, in my opinion, is kind of increasing the indemnity that the insurance carrier is paying and just putting it back to the homeowner. So if there could be some sort of regulation on how that process works and what is required, what are they allowed to do? Because right now it seems a little bit like a free-for-all when you get those things.
Yeah, that's a different task force. But I know the chair of that one too. Yeah.
Mr. Chair, I'd just like to add, and maybe dovetailing a little bit with what Anna said, the cost of claims are certainly a primary driver here. And I appreciate the Department of Commerce's presentation. The legislature has taken some very tangible steps in recent years to try to get their arms wrapped around the storm chaser issue, which we all pay for. But I would just say, are there other aspects of that process that could be investigated, in particular the appraisal process, or the things that we could pop the hood on here as a task force that actually produce some tangible results and perhaps some strong recommendations for the legislature to take a look at. So certainly getting our arms wrapped around the
And you
storm
put
chaser
that
issue.
on one of these?
Okay, perfect. Thank you.
Okay. Jessica, you've been quiet.
I have, Ms. Johnson was able to very eloquently cover all of my post-its already. So yeah, I mean, just highlighting that in the world of affordable housing, the insurance premium rates are just getting so high or are just unavailable that development is hindered, and with a lack of building new affordable housing just increases the problems and the stress that the industry is already suffering from.
Well, the only one we haven't talked about that I did one is should we look at if there are any practical revenue sources that we could tap to, for example, fund a subsidy for reinsurance, for example, something like that. And I put out one idea that turned out to be totally impractical, which is why we ended up with this task force instead. And I think, Mr. Brickwitty, you've been looking at that issue as well.
Mr. Chair, I think a number of states have started to look at creative financing solutions. I think that's something we could talk about in a subsequent meeting in more detail. I think there are some interesting ideas that have come out of states to try to look at how do you, in this effort to sort of incentivize risk reduction and also augment or amplify the state's ability to respond to disaster situations, how can you use finite public resources to combine with private sector investment to be able to expand your ability to do that. So I think that's a really, emerging area, and I think a really important one for us to think about, because I think folks around this table have probably been around long enough to know that there aren't going to be infinite resources for all the things that we might want to do, so creative financing ideas are probably something worth taking a look at.
I think everybody has gotten their 2 bits in at least once. Senators, anything you'd like to add?
Nothing at this time, thanks. Did anybody want to offer up anything else along the lines of the chair? Something they had that has not been mentioned yet that they want to make sure we have on the plate for this first conversation? Adam?
Yeah, Mr. Chair. The reinsurance market was brought up, and I think it's certainly something that this task force should take a look at. As I'm going around visiting my members across the state, certainly reinsurance costs have gone up, which ultimately get passed through. And so taking a look at that market, would have loved to see reinsurance data included in the Department of Commerce's presentation. How does that work its way into our market as well? So certainly I think that should be part of the discussion. So thank you.
And with that, let me pass it back to Sam with next steps.
All right, so just a reminder to jot on the corner of your Post-it notes your initials. We're not going to say, Jean said this or Aaron said this. It's just so we can track who's bringing up different comments. They will not be attributed to your names. Matt is going to look at those and bring the recommendations that you provided into our next meeting. So don't worry about legibility. Like I said, I used to work with second graders, so I think I can read what you wrote. And also, if you have any big ahas today after the discussion, feel free to email Austin. His email, I heard, is at the bottom of your agenda. So feel free to follow up if you're one of those people that processes when you get home and it's like, I want to make sure this is included into the notes. Send it to Austin. Is that good?
Yeah, so I think we've pretty much covered the agenda. A really good conversation. I'm really happy with the way we're getting kicked off here. A couple of things. I know we're going to want to take testimony probably fairly early on. There were a number of stakeholder groups who wanted to be at this table, and we needed to keep it so that it would actually fit around the table. But I think we're going to want to reach out to stakeholder groups that we know wanted to be here and give them an opportunity to testify probably fairly early on. If any members have suggestions about people who could offer testimony that would be valuable to us, reach out to let me and the staff know, and we'll try and get them calendared as well. Next meeting is Wednesday, October 1st, 2.
Mr. Chair?
Yeah.
Along those lines, is it possible, we put out the calendar for what our future meeting dates would be. Is there any way to kind of blueprint out what topics we want to cover on those days? So if we're looking to bring in, potential, you talked about reinsurance. I think the perspectives from the Reinsurance Association of America would be valuable. We talked about the University of Alabama study. I think bringing in Dr. Powell might be worthwhile. Just having the dates that we wanted to talk about, those would go a long way in helping us get some of those things on the schedule.
Yeah, well, I think we're going to want to get testimony as quickly as possible. So anybody who's got suggestions for testifiers, I've already asked the staff to kind of go through as the bill went through the process in the House and Senate, we had a whole bunch of stakeholder groups that were in or out. We should go through that list and, find all the ones who clearly indicated an interest in wanting to participate, who aren't at the table today, get them to testify early on as well. And then based on the conversation we have today, that's probably going to suggest some additional parties that we might want to come in to get expert testimony from as well. So I think early in probably the next meeting, my guess is that we'll probably want to get as much of that testimony that we feel like we need out there and on our record as quickly as possible. I'm seeing nodding heads. So other things that the members think we should bring up early. One of the things that we've talked about with staff behind the scenes is will we at some point we'll get we've identified a couple of important issue areas within this. Might we want to break off subgroups within the committee to do a deeper dive into particular issues that we've surfaced today as well? That's another thing that we will want to look at as well. Nodding heads for that as well. Anything else anybody would want to raise right now, just to get out there, to get onto our agenda early on? Does that sound okay, though, so far? Yeah, I think we got a really good start today. Yeah. Okay, and now, as always, you just reach out to Austin if you have any questions or comments, need to disseminate anything else to the group. And all of the meetings, I mean, having everybody, as many people as possible here helps facilitate the discussion, but if you just can't make it and need to participate by Zoom, we all understand. Okay, if there's no other business to come before us, we can entertain a motion to adjourn.
So moved.
I'll second.
Okay, moved and seconded. Any further discussion? If not, all in favor of adjourning, say aye. Aye. Okay, we are adjourned.